Good morning, good afternoon, good evening, welcome to the Bull versus Bear webinar. Steve Miley on the call for TradeDay.com. Today's Thursday, the 15th of December. Morning, everyone. We'll go through our usual regular run through in here today. Calendar, what we've had, what we've got coming up. Take a look at what's influencing financial markets right here, right now. We'll also take a look at the charts. So first of all, let's talk about the Bank of England. They've just hiked rates in here by 50 basis points as expected. Said they will respond forcefully if needed. They voted 6-3 in favour of a half percentage of rate hike, taking the base rate to 3.5%. A slowdown from the 75 basis points increases as expected, but they certainly remain in a very hawkish stance in here, and kind of to some extent echoes the Fed. So if we go in here, we'll see there's the rate hike in here. Previously, the rate hike had been more unanimous, I think, on the previous rate hike. So it was actually the forecast. Actually, look. So the previous was 9-0. This time it was forecast at a 9-1. It came in at 7 to. Did I say 7-2 there? 7-2. 6-3 there. Saying 7-2 on here. Okay, there's a discrepancy there. Anyhow, so the Bank of England hiking rates are kind of as expected, but certainly overall probably seen as a more hawkish tone than the market had previously been anticipating in here with the language. So that's certainly really, as we say in there, echoing really what we've seen in here. Despite that, in here, what we saw on the charts has been a sell-off in the pound. So the pound's lower in here on the back of that, despite it being, if anything, probably a slightly more hawkish tone. Just obviously winding back to yesterday, it was all about the Fed. Very kind of, you would say, negative price action, further negative price action overnight. Powell saying Fed will not change their 2% inflation target in here. I'll come back to that. Obviously, stocks in here initially up, then a lower decline after Fed shocks halt global rally. Tesla dropping in pre-market. Elon Musk noted to be had sold another tranche of shares, probably almost early to fund what's going on with Twitter. So the Fed in here basically raised by 50 as anticipated. Central bank says more work to do to vanquish inflation. Possibly projected rates would end next year at 5.1, right? So they're saying 5.1 according to their meeting before dropping to 4.1 in 2024. Higher level than previously indicated by them. But it's not what the curve's showing us. The market still does not believe it. So now we're pricing in for February. We're at 425, 450 now, just shots for a 25 basis point cut or potentially no cut, and then going into March, then maybe looking for a 50. So we're certainly up by 50, according to the market in here by March. Okay, so we're at 425, 450, 475 to 500, so up by 50 by March. So whether the February reading here is like for 25, so we're looking at 225s, or whether we're looking for a pause in February, probably unlikely, and then a 50 in March. But the market pricing in 25 and 25, and then staying there, 475.50. So as we said there, going back in here to 5 things, looking at peaking rates at 5.1. So that sort of comes in line what the Fed tool is telling us, 475 to 500, okay? Outside chance of it being a bit higher. But if we look through, as we go through, 475 to 500, we go through May, through June, it's staying at that peak there, through July, all at 475, 500. But then by the time we get to September, there's almost a growing chance of it for 450, 475, and then by November we're at 450, 475. So the market pricing in a rate cut by the end of next year, certainly, and actually a bigger rate back to 425, 450, back to where we are now by the end of the year. Where what are the Fed telling us? Well, the Fed are telling us, they're telling us they're going to be at 5.1, and then not till 4.1. going through 2024, which was higher than anticipated. So the Fed are very much staying on course for higher rates, rate cuts coming not until 2024. The market kind of not believing the Fed. They think the Fed's got it wrong. They think the Fed will be forced to be cutting rates because we're going into more of a hard landing. The Fed are saying they're anticipating a soft landing, okay, but there's expecting a soft landing, but they're going to keep rates higher for longer. The market is expecting maybe a hard landing, and then them to be having to cut rates to deal with that hard landing, although the Fed are telling us they're going to stay on course and inflation is what they're fighting. So the market and the Fed definitely giving disparate views in here. It's almost like the equity markets, remember this is the interest rate curve. This is from the bond markets and from the interest rate futures markets. They're not believing that the Fed in here, but they think we're going to have to be cutting rates. But the equity markets are certainly listening to the Fed and saying we're going to be hiking more, and maybe agreeing that we're going to get to a hard landing as well. And then they're also so the equity markets looking at all of that as far more negative. So a negative fallout from that yesterday. So the initial rally, and then the market fading or failing, and then we did get a bounce and then fading again in here overnight. FTX still continuing to cause problems for the crypto market in here. Musk, as a sell, said sold further shares, offloaded $40 billion worth. What else do we have in here? Stocks lower in here this morning, only overnight. And we've had Swiss National Bank, it's already raised by 50 basis points. The Norwegian Central Bank by 25. Bank of England, as we said, just raised by 50. And we do get, going back to the calendar now, we do get the ECB we get the answer in just about 35 minutes time in here at 1:15, and then you get the press conference from that. Where's the press conference? Here we have 8:45 Eastern. Okay, so in just over half an hour we get the decision, and then we get 8:45 Eastern. We get the press conference, fully anticipating a 50 basis point hike also from the ECB. Watching out for forward guidance on that. From the US on the data side, really focus on the industrial production numbers at 9:15 Eastern time. Probably the standout there, although probably not too overly significant. Retail inventories at 10 o'clock, business inventories, not huge data in here for the US. So really the focus now on the ECB, and then just how the market now is in the aftermath of the Fed. So Musk selling the shares, futures lower over worries of a more hawkish Fed than the market's pricing in. Investors bet Fed will blink if recession hits despite higher for longer mantra. So yeah, this is kind of, I'll share this one in here. I haven't actually read it in detail, but that's what's telling us, that's what I'm kind of trying to get across to you guys in here. The Fed are basically, saying they're on course, they're going to stay aggressive, higher for longer. The market, you see by the curve, is not believing that. The equity market's somewhat believing that. The equity markets are even saying, well, either the Fed's going to be more hawkish, or we're going to go for a hard landing and we're going to get recession, and that's not good for stocks either. European bourses are lower this morning, notably the French and German indices. The DAX and the CAC down just over 1%. The FTSE is down 0.4, probably being helped, the FTSE, by the weakness in the pound. Remember, currency weakness helps out the index. So the pound is weaker this morning after the Bank of England, and that's probably helping the FTSE not go so low. And if we look at the US exchanges on the overnight, we ended up between 4, 6, 7 tenths down in here across the major exchanges yesterday. We're another nearly 1% down on the S&P, 7 tenths on the Dow, and over 1% now down on the Nasdaq on the overnight. Let's take a look at the chart. So you'd have to say, let's start off with the Nasdaq in here. The day before the consumer price index data, CPI data, we had this big shooting star, kind of warned that was maybe a negative. Remember, that doesn't get qualified until you break below the low of that session. We definitely got that yesterday. Initial rally fading and then lower. And then the market did bounce before the close. To be kind of we're down on the day, but not massively down on the day, but then giving up all that bounce overnight, and then also down through the low in here. Now, on my daily reports, you'll see I'm kind of clinging to a more positive bias. Now but that was obviously, they were written last night after the close. Now, in here going into this morning, the market's looking a lot weaker, back down through yesterday's low on the Nasdaq. And if you look at the 15-minute chart through, there's yesterday's low. So the market, there's a CPI spike and then rejection. market sideways into the Fed, kind of tried to rally pre-Fed, sold off post-Fed, then rebounded. It looked okay going into the close around here, and then weakness post-close, and then overnight down through yesterday's low. So certainly looking more vulnerable. This string of lows in here, below here, it does look really a lot more vulnerable. So you've got lows lined up in the like 11,650 down to 11,630 area, down through there. Quickly aims us then to these supports here, 11 and 5.5, 550, 540, and then potentially even lower. So it's certainly setting up more negative. For me today, if you want to watch the upside, what I would say is check it out, the trend lines that come through here. So this trend line here, that's a long way to get up through there. That one's currently sitting around 11,900, okay? Ahead of there, though, you've got the more accelerated line that comes down from yesterday's peak through the overnight activity, this one here. So that's much closer, so you get an early indication. You've got a little swing high in there as well. I don't know if you can see that one there. A little swing high. That little swing high is 11,753.75, and that's going to be pretty much quite close to where the trend line comes in. So up through 750, 760 would certainly be more positive in the very short term. Really, it needs it back above like here, 11,870, and then ultimately up through like 11,900 to be more bullish in here for the Nasdaq. Let's take a look at the S&P. Similar story, after the CPI data, we get the shooting star, erratic yesterday, but rebounds, holds on, doji pattern, indecision, but did give a negative signal, having broken through the previous day CPI day low, and then back through the low in here. This string of lows, remember these lows in here, you have this whole string of lows put in respect to this low over here. This one over here, remember this is all in the March contract, guys. Sorry, I need to stress as well. Expire is coming up, right? Make sure you should definitely be trading on the March contracts now. So over here, this low is 39.45.5, and you have a string of lows put in here in respect of that low. So that's going to be super important to monitor. If we break down through there, it all starts to look very ugly for the S&P, similar to levels we just looked at on the Nasdaq, but these are more important having held there. So that's the super important one, really. The previous low over here from back on the 17th of November, that swing low, 39.45.5. And if we zoom in onto the 15-minute chart, you'll see these session of lows all in here, all between basically 11.54, 55 down to 11.45, 55.45 is a massively important area. Now, obviously, we're some way away from that at the moment. Triggered down through the current low. You've also got the low there, the initial one over here. We have at 39.69 as well on the downside. Where's the top side? Well, it's the same two trend lines, I would suggest. So you're doing the one off the high, comes in down through here. That's probably closer, but it's all the way up here, and these, above these failure peaks from overnight. So 40.36 kind of area, and then 40.43 really for both the trend line and these little swing highs in here. The more accelerated trend line comes through on the overnight levels in here. We're pretty close on that one. And then you've got that little failure high there, the same little failure high. That one there, if you want a much closer level, is just above 4,000, 4,002. And then the trend line is going to be pretty much at the same level. So above 4,002, 4,003, and then all the way up here are like 35 to 45 area on the S&P on the upside triggers. As I say, downside, you got the overnight low. Overnight low is 81.75, and then you got this next trigger down at 69. But that critical area down here, and then the old low from November is going to be really the important levels on the downside. Let's take a look at bonds and the commodity markets in here. Oil stayed bullish, didn't drop and give up after that. We've seen the last two sessions, rallied with stocks and then didn't see the downside, and then a dip and a rebound overnight. Oil's looking really firm in here at the moment, so really upside. Can only play that from the long side in here, and now you can see the market sat right below this. There's an important little swing high there on oil, 77.74. We've been up twice in here at 77, actually 75. We've been above there. No, I don't think we have. So maybe I got that level wrong. That high there is 77.88, excuse me, 77.88, and we've failed there a couple of times. Up through 77.88 certainly looks a lot more bullish on oil. Yeah, I can only remain bullish on oil. It looks very positive going into today. Let's take a look at gold. Gold in here, really bad morning actually. Big sell-off in here today, creating almost a double top pattern, just holding above the low there. Does look like we could have it's already done a lot of work today, so that's the only problem about entering a short. But you know, there's no way I'll be coming into this looking to sell this, to buy this on on gold. We are trying to bounce, but you know, if gold gives up this, you know, this low here at 1778.1, it looks really negative. You've got like a double, triple top even up here, quadruple top arguably, or a 5-point top, 1, 2, 3, 4, 5-point top here on gold. So really watching out for the downside. We are getting a little bit of a rebound in here, but watching out for downside on gold. And finally, I'll finish off with the treasury market staying firm, staying bullish in here, despite the Fed, you know, almost telling us they're more cautious and more hawkish, which would imply higher yields, lower prices. We are seeing a very resilient tone. We're still inside the CPI patterns. Remember that pattern there is a CPI pattern, consolidation inside pattern yesterday and again today, but very resilient. So I can only play this on the long side, you know, as we've got a bid into bonds as like a safe haven really in the current climate. And if we look where we are there, you know, there's the market, you know, there's the CPI day. It's been a chop fest in there. But I think if we clear above the peaks here, you can see we've failed 1, that little swing there, 2, 3, and we've gone up and we're sort of cautious at the moment. If we can get back above, you know, really that high, if we can get back above, this is on the bonds, on the March contract, if we can get above 131.22, it looks a lot more positive for bonds. And then you can easily see it back up to the high and higher as well. So bonds looking bullish, oil looking bullish, and here, but gold looking negative and stocks setting up relatively negative going into today. Okay, if there are no questions, I'm going to wrap it up there. Wish you all a great trading day. Please do stay safe, take care, and I'll be back with you for the final bull versus bear webinar tomorrow. Bye.